Hi there traders and investors, today is Friday, August 11 and I'm ready to share with you a fresh market review prepared for InstaForex. Yesterday the euro-dollar pair was trading actively amid the US inflation report. I hope that those of you who opened long positions closed down with profit. Let's see what happened on the charts in more detail. Our first instrument is gold. Gold is trading without any visible changes. Actually, I see that the current downtrend is approaching its lows. Despite a volatile session yesterday, the precious metal retested the recent low and then returned to the previous levels. This indicates that the bearish momentum is wearing off and the price is approaching a reversal. The first signs confirming my assumption appeared yesterday when bulls performed several false breakouts. I won't be surprised if we see a reversal in today's session, especially if the US PPI comes in weaker than expected. Now let's go back to the euro-dollar pair. On Thursday, bulls finally succeeded in their rally and broke above the 1.1050 target. As a result, take profit orders were activated and I hope you reaped your profits as well. I earned around 1,000 from these movement. I would like to note that there were two intraday attempts to cancel the uptrend as the euro declined at some point. But eventually, those of you who bet on the breakout of the above-mentioned target ended up with gains. The breakout happened right after the news release and it was a very sharp and precise move. You probably want to know where the euro will move next. Some of you think that it's time for a reversal based on the false breakout and a pause in the trend that was observed yesterday. You might be right, but keep in mind that if you want to go short from this level, you may gain just 30 pips while risking 60 pips, which is not a good risk-reward ratio. To be honest, I'm quite skeptical about the instrument right now. According to analysis of extremum points, a bullish channel is being formed. This means that the bearish tendency can soon be replaced with a bullish bias as we can see higher highs and higher lows emerging. That is why looking for a short entry can be quite risky, especially if sell positions don't promise great profits. Do your math before making a decision. Meanwhile, the USD-CAD pair slowed down after a strong rally. On the one hand, we can see the accumulation of bullish potential at this level, which will develop sooner or later. On the other hand, the pair has left a target at 1.36. I'm confused about this instrument right now as I see no hints for its future direction. So I decided to stay away from it today. GBP USD also acted in line with my trading idea yesterday and broke through the level of 1.28 following the release of the CPI data in the US. After its fall and a downside breakout, we can now see a cancellation of the bearish structure. I don't say that you need to rush to buy the pair immediately, but I won't be surprised if the instrument starts rising after yesterday's decline. As we can see on the chart, an ascending channel is being formed. In terms of the stop hunting strategy, I currently see no suitable horizontal levels, although I'm not planning to go short all the way. However, if you wish to sell the pair, do this above the breakout level. As for the USD JPY pair, it got stuck in a downtrend initiated in June this year. The upward targets remain unchanged. At the time of the news release, I could see the yen falling rapidly, although later it managed to recover its position within an hour. Right now, I see no signals to act. It would be nice to see a false breakout of the previous month's high. Let's wait for more hints. Until then, I won't make any decisions. That's all I want to tell you today. Hope to see you online soon. Good luck.